I've raised, I think it's like 14 or 15 million bucks for real estate deals over the last 14 years. And I did not go to a private school. I didn't go to Ivy League college. I'm not a member of a country club. Okay. I started out by doing it with people that I knew. Okay, people that I like and trusted me because I'm me, not that because I'm some juggernaut real estate investor. There are people that like and trust you because you're you, and that might have a retirement account, that might have real estate free and clear, that might have some means that they could put to work in real estate in your business if you explain it to them the right way. Hey guys, my name is Matt Faircloth, and I've been a full-time real estate investor for 14 years. BiggerPockets is proud to present its first docuseries, Fair and Square, a look behind the scenes of owning an apartment building. This docuseries is about a 198-unit apartment building that we own in Fayetteville, North Carolina. You're going to see the good, the bad, and the ugly. You're going to see how we acquired the property, see how we raised the money for the property, and you're going to see the challenges that we had and what we did to get around those challenges to create success. You're going to learn a lot here, so check it out. This is Fair and Square. All right, so the prerequisites that I believe it takes to run, and this is like, Matt's opinion, everything. This is not like the law of the gospel laid down by Matt. This is just what my opinion of what I think it takes to run a mid-sized multifamily asset, okay? I believe you need to have 1, 3, and 5 year goals because you got to know where you're going in 1, 3, and 5 years. What I mean by that is, what does life look like for you in year 1, year 2, year 3, and year 5 from now? If you are married, if you have a significant other, you need to have that conversation with your spouse, not by yourself, because they're in life with you. You need to talk about what life looks like. Where do you live? What are you up to? What does your day-to-day activities look like? Have that conversation with your spouse, enroll them in it. Okay, and then talk about what kind of business you need to have to make that life a reality. Okay, that's what 1, 3, and 5 year goals are. And the reason why you need those is because anybody that invests with you is going to likely want to know where you're going to be in year 1, 3, or 5, because real estate investing is a marathon. It is a long-term relationship. So wherever you're going to be in year 1, 3, and 5, that's where they're going to go. Okay, they're gonna go with you on that journey of years 1, 3, and 5. Okay. You got to develop a track record. Now, you can do that by doing things like getting your license and working with Five Pillars Realty Group. You can do things like working with a larger real estate outfit. You can do things like becoming a wholesaler. You can just dip your toe in real estate or get some experience in real estate. But I am not a run to the back of the room guru. There is no program for sale. I'm not selling shit except for my book. Okay, so I'm not going to be the one to tell you guys. Pardon my French, by the way. Sorry. That's how it's going to roll. At the end of the day, I'm not selling you guys some $10,000 program. So there's not only 3 left. There's no boot camp. There's no nothing. Okay. So I'm not going to be the one to tell you guys that you need to go and buy a multifamily property. Anybody that's telling you that something like that is absolutely full of shit. And there's no way you can go and buy a 100-unit apartment building or a 200-unit apartment building your first foray into real estate. Not going to happen. Not by yourself. Okay. And I don't recommend you do it because it's just like trying to run a marathon if you've never gone for a jog before. Okay. It's possible, but you might also break your leg or pull a hamstring or get hurt really bad. You might limp through it, but odds are you're going to get hurt. Okay. You're better off running a 5K than a 10K, than a half marathon, than a marathon. You guys with me? Okay. All right. Okay. Build an investor database. We all know people with money. That is the premise of my book. I'm going to touch on that a little bit tonight, but tonight's presentation is less about how to raise money, how to find people with money. If you guys want to know more about that, I have a lot of that on YouTube. I have a lot of that on BiggerPockets, and most importantly, it's all in my book, Raising Private Capital, because my book is simply about how we all know people with money. I've raised, I think it's like 14 or 15 million bucks for real estate deals over the last 14 years. And I did not go to a private school. I didn't go to Ivy League college. I'm not a member of a country club. Okay. I started out by doing it with people that I knew. Okay, people that I like and trusted me because I'm me, not that because I'm some juggernaut real estate investor. There are people that like and trust you because you're you, and that might have a retirement account, that might have real estate free and clear, that might have some means that they could put to work in real estate in your business if you explain it to them the right way. Okay, all right. So build an investor database of people that you happen to know that may or may not have an interest in investing in real estate, and then just stay in contact with them. Even if you haven't done a deal yet, okay? Build the database of people and stay in contact with them. We use like MailChimp and email, eBlast, just find a way to stay in front of people to make sure they know, hey, I'm here and I'm investing in real estate. Hey, I'm here and investing in real estate. Hey, I'm here and investing in real estate, and eventually when they're ready, they'll call you. Hey, you invest in real estate, right? Yeah, I do. How did you know? Because I say it every month, Do some small multi-deals. This might not speak to all of you, but if you invest in you have like a 6-unit, right? Okay, so the experience that Shelby gets by investing in a 6-unit, she can transpose into larger and larger real estate, right? She might be able to do a 20-unit next, or a 30, or a 40, or a 50, or if she builds a big enough team, a 150-unit because of what she's learned by doing a small real estate transaction, okay? You don't have to jump into the deep end head first. You can start and work your way out to the deep side of the pool, okay? All right. Here's the marathon, the other mindset part of real estate. And this is what I said before. This is not a sprint. This business is not for the faint of heart, but it's also for people that are really committed to make money in real estate and committed to make a living with this business, or at least, boost their own personal income and build their wealth with this business. This can be very lucrative, but the bottom line is this is not something that in a month you get to make $1 million. You might make it in 5 years. That's reasonable, but it's a marathon, okay? Here's the context of a marathon, okay? And if you guys haven't figured out already, all the pictures that I'm showing are all from Douglas Square on Hope Mills, okay? So see yourself as a custodian of other people's money. Custodian means that you guys are in charge of their money. That means that it is your custodial duty to take care of it, to manage it. And I know you're not like a Series 7 licensed, you're not a financial planner, but if they have their money in your deal in an apartment building or in something large, you are in charge of it. You need to be comfortable with that. So unless you won the Mega Millions, you're going to likely have to pass a hat around your own network to put together a team, including passive investors, to buy into a multifamily asset with you. If you are driving the bus and those investors are on the bus, then you are in charge of their long-term real estate wealth, okay? Play the long game all the time, right? Sometimes it's real easy to be like, oh, that realtor screwed me over, so I'll never call him again, right? So if you get crossed with an agent or crossed with another realtor or whatever in this world, or just anyone, and at the end of the day, unless they absolutely, screw you over, it's just so much easier to play the long game and take them out to coffee and clean up, right? Because relationships go, especially if you're younger in this business, but even if you're, however old you're in this business, it doesn't matter. Play the long game all the time, meaning don't burn bridges ever, okay? Ever, ever, ever. Even just have closure conversations and say, lose my phone number, at the end of the conversation, okay? Whatever it is, don't burn bridges because it will come back. It's a small world. Right? Okay? So play the long game when it comes to working with your investors. Don't ever be like, I'll just make a quick buck and get out. The people that are in this business to make a quick buck, and there's plenty of them, right? You all know them. We all know people that are in this business to make a quick buck. Look around in a year. They're gone, right? They're not the ones that you see over and over and over at real estate events that are building networks and that are building and working to build this business. Forget it. Those are the ones that are in it for the short game are flash in the pan. There are lots of sizzle and they go away quick. Okay? You may not get the lion's share at first. Where's Justin? Okay, cool. Can I tell you a story? At the 40? Okay, cool. I have to ask permission. Like he's gonna say no, right? So I told it. Sorry. So Justin bought a 40-unit apartment building up in Portsmouth? Yeah, Portsmouth, Virginia, just outside in the Hampton Roads. You guys know where I'm talking about? In the Hampton Roads area? Cool. Okay. So he bought himself a 40-unit apartment building up there, and he has a good share of it, but he needed some help. So he came to me and says, hey, Matt, can you coach me and mentor me and help me through the process of buying this apartment building? And I said, absolutely. And so we worked at a deal for him to give me some equity in exchange for coaching him through buying the 40-unit apartment building. And it was a win-win, right? Then Justin had a few other things come up. He needed some help raising money. So he had to give away a little bit of equity in exchange for helping him raise money. And then he needed a personal guarantor, right? So he needed somebody to sign off on the mortgage for the property. So to give away some equity for that, right? So the bottom line is Justin got to close on the 40-unit building, and he owns it. It's his. He's the operator, the director, the controller, the CEO of that apartment building, but he had to give away some slices to get himself to closing. I'm not saying you guys are going to have to do that all the time. I'm not saying you guys are going to have to do that for every deal you do, but for the first couple, it's okay. Play the long game, right? Get to closing, get it done, and if you got to give away a little bit for somebody to help you out, for somebody to help you raise money, don't scratch and claw over 0.5%. Just get it done. And see that you might have to give a little bit away to get a first couple of deals under your belt. And it grows quickly. Once you close, then you're that guy or girl that owns that 40-unit building, and you've got that on your resume, and people don't have to know that you only have 18%. It's okay. Because the next one, I guarantee you'll have more.